everybody. Welcome to the game plan. It's Monday morning, and I am ready to rock and roll with you guys today. We're going to cover all the charts that are important for this morning's action. We're going to go over data, economic stats, all of the keys that are going to make you informed from this place right here, Verified Investing in Studios. And again, guys, as I always say, this is not mainstream media. This is telling you guys the facts, the data, letting you guys decide what the heck is going on. All right, so I wanted to try something new today. We're going to try to throw it up like this, and if I can hit it, all right? We're going to see. I might look the fool, but that's okay. Oh, yeah, all right. Little bit of an extra thing. I figure, what the heck? Either look like a fool sometimes or not, one or the other. Either way is fine. All right, before we get into the action, here's the homepage. Don't forget, guys, new articles always coming up here. I wanted to click on this one here. Home prices drop sharply, or to drop sharply. I wrote this article actually this morning. And one of the things I wanted to show you guys, a lot of people out there, in fact, we were just talking about it in the office today, how it's unbelievable how high rents are, how high mortgage payments are. You add in taxes on it, car insurance, all of these other things, and it's really remarkable the economy has held up as long as it has. But based on everything I'm seeing, guys, things are in trouble, and it is starting to deteriorate very, very quickly. Couple things that I found out over the weekend here that are sending or likely to send home prices sharply lower. Take a look at the inventory builds here. I pulled this off Zillow, and again, what we see, Tampa, Florida, right here, look at that, over 50% increase in inventories from this point, from last year, this point. So from 1 year last time to this date today, 50% increase. Orlando, Miami, huge increases all the way down, and you're seeing the inventory build. Remember, the biggest thing out there was why the heck our home price is staying so high? Because there's no inventory. That is now starting to change. So again, expect home prices to start to crater lower. Again, I think 20%. In a year from now, you'll be looking at 20% declines in home prices. So be ready for that. And by the way, this is happening in the stress on consumer with an economy that is still very, very strong. Now, scrolling down here, I wanted to show you this. This is the sentiment, buyer sentiment right here. The red line is, again, say it's a bad time to buy. Look at this, how high it is right now. Incredible. In fact, the highest levels since really going back to 2007, going into this point right here. Incredible. And in terms of people who say it's a good time, is at really ultimately major lows down here. So some interesting stats. These stats are available on verifiedinvesting.com. Go check it out. All right, couple other things I wanted to show you guys real quick here as we scroll down on the home page. Other chart analysis. I have some key charts here going into gasoline's chart telling us where it's going to likely bottom out. Semiconductor. This is actually a really interesting chart. I'm going to click on this one because I do want to showcase this here. If we look at this, this is a remarkable chart on the SMH, the semiconductors. If you see, we're creating a bearish pattern here. This is the Fibonacci 618, which we just tagged on Friday. And ultimately, my guess is this is going to curl over, at least probability-wise. That's what the charts are telling us. Again, lots of good information here, guys, for all of you guys, all free here. I even put up the insider buying and selling. And one of the things I wanted to go over here is that insiders continue to heavily sell. Now, if you look at this, there was a lot of selling back here, but then recently over the last month, it's kind of gotten a little weaker. Now, why? Let's talk about that, because a lot of people would say, oh, maybe insiders aren't selling as much. The answer is no, it has nothing to do with that. The answer is this. There's a quiet period that insiders cannot sell in before earnings announcements. And so in general, if your earnings announcement is like 2 to 4 weeks away, you cannot sell your stock as an insider, because what does it do? It basically makes it look, whether it's true or not, it makes it look like you have inside information on earnings and you're dumping or buying your stock into earnings. And that's why this period here from basically early April all the way through now has been a little bit lighter. But look, as earnings are passing, those windows are now closing, and we're starting to see the insider selling mount again. So just a couple tidbits there, and don't forget, I've said this stat before, but we do know that insider selling over the last 6 months or so has been as great as it was in 2021 before the stock market topped out, okay? And we had the big 2022 correction. Going into charts here, we're going to look at the 10-year. This week is epic because we have the PPI data on Wednesday. And again, that's Producer Price Index. Now, one of the things I'm paying attention to here, guys, first of all, we have this beautiful channel, right? This is an upsloping channel. I've talked about this quite a bit with you guys. We followed it. I called a down move in the yields when we were up here. We got that right down to support. I'm now going on record saying that based on the pattern formation, based on stats, based on data, This is likely what we're seeing here is a bear flag formation, and it's going to likely bring a breakdown in yields. Now, with a PPI on Wednesday, that may tell us that we might get a lower inflation reading than we are expecting. And so again, the markets are very nervous because we've had 3 months in a row now where PPI has come in hotter than expected. Could we potentially be seeing a sideways bear flag that yields a down move? And if we see it this week, the only answer, honestly, is yields are only going down if inflation starts to creep down. Now, they could also go down because of economic concerns, but in all fairness, we don't really have big jobs numbers this week, so it must be, if this does play out, it's likely telling us that the PPI could come in lower than expected. Now, would that make the stock market go up further? It might, at least initially, create a rally in the stock market on Wednesday. We'll have to watch and see, guys. And again, by the way, I'm going with probabilities. Remember, that doesn't mean it's 100%. It means it just favors it greater than 50%, that if you look at this pattern formation, we know what pattern formation it is. Generally, those play out to the downside, but there's no guarantees in trading or investing, as we know. All right, pre-market data, S&P continues to grind up, so we're seeing just further upside. The Dow Jones Industrial Average has had 8 straight up days. Today would be its 9th if it ekes out another gain today. But this is your 10-minute S&P chart, and again, we are seeing it. We're right around the highs of the day here on the S&P 500. Now, looking at the NASDAQ 100, I do have a level that I've isolated out. I will be potentially day trading this today. It would also be a potential swing trade opportunity for those of you that are interested. But basically, we have a gap fill right here on the QQQ, and we're very, very close. This is around 445.40. So 44.5.40, and that again is very close. I think pre-market, if we can look at the pre-market, let's see where we currently are trading on the QQQ. And the Qs are trading at 443.67. So basically it puts us about $1.80, give or take, from that level. So about $1.80 away, which is nothing for the QQQ. It could easily gain that, and that would fill that major gap on the daily chart. All right, couple key stocks in motion today, guys, as we get into the action here. What do we see? This is ARM Holdings. ARM Holdings announcing basically just in the last 24 hours that they are going to be having a AI chip that rivals NVIDIA starting in 2025. The stock pre-market is trading up on that news. If we flip over here, trading at 108.85. So again, it is higher. You can see where it closed on Friday, right in this range. It is higher on the morning session. Now, the biggest thing to me, ARM's not moving that much. Like, it's not a tradable thing for me today. It's not a big enough move at this point. But what this does signal to me is more competition, right? So you're talking about a scenario where you have more and more of these semiconductor companies coming out with competitors to NVIDIA. We know AMD is coming out with it, Intel. I mean, lots and lots of different players. And what does this mean? It ultimately means that it's going to drive down margins. Now, it may not be till 2025, but it is coming, just like the EV stock saw this, where we saw a massive amount of competition on Tesla, and Tesla obviously is way off its all-time highs. All right. So that's one of the things I wanted to just look at there. If we go here, oh, by the way, on ARM Holdings, before we get back to that, I just wanted to show you that in general, there is a bear flag forming on this. So we'll have to see where we ultimately go. But right now, this bearish pattern, as long as we stay inside of this pattern, would eventually yield a move to the downside. And then I would be eyeing this level right here, right around this gap fill. So you can see this huge gap right here. If that bear flag plays out, and right now we're getting this type of pattern, if it goes down right there, that would be a potential buyable level as a quick swing trade for me. Next up, GameStop. Now, GameStop's not something I'm going to be trading here today, most likely, but I did want to just talk about it. It's had a big run to the upside. Roaring Kitty, remember, he's the one that again was so influential in 2021. He did tweet about this, and kind of for the first time, I think, on X, like in a year and a half or 2 years or whatever it was, he basically tweeted. The stock, again, pre-market is up pretty substantially here. If we flip to real-time data, pre-market, we can see we're trading around $25 here. So this is up substantially on the back of this. Now, the reason why I'm a little scared to short this is because we all have to remember what happened in 2021 with the way this thing ripped up. And so, again, as a short, if I'm looking to short it, I got to be so careful. as honestly we all should be. Now, would I chase and buy it? No, I don't chase this kind of stuff either, because just as easily as it could go up crazy, it could also go down crazy. But I did want to bring that to your attention in terms of a price action movement, and just to give you guys a heads up on that. Just talking quickly about resistance levels, there is a big level, and again, this is, again, just a level, but something to keep an eye on. Big level around 27.50 in fact, and that would be probably the first big level of resistance on GME per the technical chart. Google today. Google's under pressure pre-market. Again, this stock is seeing some pressure due to AI concerns about Gemini. OpenAI's presenting, I believe, tomorrow on their sort of deal here. Now, for me, what's amazing about this is the downside action was predicted in the chart that I showed you. I've posted this on the website as well, Verified Investing. If we look at this and we flip over to the weekly chart and we zoom out, look at this chart, guys. This is a really amazing chart. So you have two trend lines on the weekly that are converging. We take the all-time high from 2007, which was just before the Great Recession. We connect it to the 2021 highs right there, and literally the recent move up on earnings that put the high end of the stock was right to that level. We also have a secondary level here to here, and it's right in that same wheelhouse. So what that tells us is when you have a level that goes back to like the dot-com bubble or the Great Recession or any of these other major pivots before huge market corrections, they usually tend to be very influential on rejecting price when price is coming up from underneath. Okay, so again, in other words, what I'm expecting is further downside, but it doesn't mean there won't be tradable opportunities. So for me, if we go back to the daily chart, where would be a trading opportunity today? Well, day trading wise, I'll be watching for the gap window, which is right around 163, this low right here on the daily chart, right through here. And then if it continues down, you have a big level here and another level here. So these other two levels, and my lines aren't perfectly straight, but you guys can figure out again, it looks like right around 157.50 and then 154 and change right down here at gap fill. So 1, 2, 3, those are your technical supports on Google. But in other words, when you look at the big time frame, that's the more dominant one. So on a bigger time frame, if I'm looking at this 6 months out, I would expect Google to be much lower. These are just bounce levels on the interim that maybe are trading opportunities in the short term. All right, Netflix, again, one of my favorite shorts here. Why? Because we knew we had bad earnings. The stock came down. It had rallied back up. Amazing gap. There's a gap fill right here that it filled. Then it tagged or kissed this line. This ultimately should start to trade back down. I love trading opportunities like this where a stock has, you know, bad earnings and collapses, and then it goes back to the pre-bad earnings levels right there, because it basically gives you the opportunity to get in on the short side here knowing the negative earnings already, right? Versus going into earnings, you didn't know that. We didn't know that, then it fell. Now it's giving you that opportunity. Facebook, by the way, /Meta is doing the same exact thing. So that to me is also a bearish setup. One chart to go over for the market tomorrow morning is Home Depot reports earnings in the pre-market. I just wanted to give you guys this level in case we see a big dump on Home Depot. There's a huge level just below 300. Multiple trend lines going back a long way from the pandemic low to here, right through these lows here, and here, and then right there, converging just below 300. If this dumps into 300, which would be a huge move, let's not kid ourselves, it's probably pretty unlikely just on earnings, but it may happen if earnings are negative and it falls multiple days in a row. The big level just below $300 for a bounce level. All right, we got to get into our drawing, so we're going to see exactly what we have or who's going to win the 1-minute scalpel today, guys. That's Dr. B's amazing course, which again, just honestly blows my mind every time I watch that thing. It is incredible. It's only about $300 and someone's going to win it today, but if you aren't winning it and you want to buy it, it is amazing. All right, the winner today, VE9. So V9 here with a 9 in the middle. There you go. Congratulations. Reach out to Lawton at verifiedinvesting.com. He will hook you up with this course and get it all situated, but great job right there. That's going to be a game changer for your investing and trading knowledge. It truly is. All right, what we're going to do now is we're going to spin the wheel to find out what the next winner will receive tomorrow, and we're going to do that right now. And then we're going to take a quick 30 seconds to thank Lucas Algo because they are rock stars here. All right, the winner here, look at this, TradingView, 1-year membership of TradingView. That is awesome, folks. Again, that's like $500, $600, $700 worth. Their premium package right there. And again, congratulations to tomorrow's winner, which is TradingView, a 1-year membership. And just to shout out Token Metrics for being on here. That's amazing. We also have NordVPN. We have so many great sponsors in here. I Trust Capital, and of course, Lux Algo, which I'm currently continuing to develop something for their debut, and I think it's about a month that this should be out, but it's my scanner, which again will be debuting on Lux Algo. Make sure to look at the link below here, and you guys can see everything they offer, but it's amazing to have more technical signals popping up on the chart. So let's take a quick 30 seconds break to thank Lux Algo for being an amazing sponsor.
Have you considered enhancing your trading experience? We have an amazing tool for you. Lux Algo creates next-gen trading indicators to help the world understand the markets in a smarter way. They have the largest user profile on TradingView and are the only official Discord partner in the technical analysis space. Lux Algo Premium operates seamlessly with top platforms, such as TradingView and Discord, making it the perfect tool for every trader. Take your trading analysis to the next level with Lux Algo. Please visit the description below and sign up for Lux Algo today.
Alrighty, guys, we're back. We got to talk our crypto action, then we're going to go into the commodities like gold and silver. Number one, we could see that again late last week we kind of dipped down, over the weekend paused, and now we're pushing back up. Now there is some new information I want to kind of highlight on this chart. So number one, we're still in this channel, which is still, in all fairness, just calling a spade here. This is a bullish channel, right? You have a big move up here and then a lot of sideways chop. Something that caught my eye that's now forming, and this is why every day when you're analyzing charts, when you do it correctly, you get a new piece of the puzzle, and something will be revealed. Like again, it's like, all right, I see like an animal eye here, but is it a cat? Is it a dog? Is it what? You get another piece. Okay, now I can tell, right? And that's really what we're doing here. So one of the things that I was checking out was take a look at this. What type of pattern potentially is this, guys? Is that an inverse head and shoulders, which is a bullish pattern? It is. Now, granted, it hasn't triggered yet. The trigger line would be right through here, and so we're still below. It's untriggered, but these are the types of things that good investors and traders are always looking at. We're looking to see basically, you know, what's potentially popping up. We have to analyze both the upside risks and reward and the downside. You just can't be like, oh, I only think it's going to go up, so I'm only going to look for bullish things, or oh, I only think it's going to go down, so I'm going to look for bearish things. If we look hard enough, we'll always find something, but it's about looking at both sides and then looking at the probabilities for which one's going to play out. So again, what I would say to you is this: as long as we hold this range here, then the net chart channel is bullish. If we can break above this zone here, which is around 64,000, then it becomes very bullish for a move up here, and then potentially a breakout higher. So again, not too shabby on this chart of Bitcoin in the short term, but again, it's still preliminary. For all we know, tomorrow we'll get a big candle to the downside, and if that happens, then let's say we get a candle here, then that totally kills the inverse head and shoulders. Granted, we're still inside of that little range, so it would still be a positive channel, but the inverse head and shoulders would no longer be valid. Now, flipping over to Ethereum, and I'll tell you, Ethereum is a tricky chart here. So Ethereum has this amazing longer-term trend line, right? This is basically the trend that started in October, and it's held Ethereum up the whole way here. You can see how many times we're hitting this line. Now, again, for me as a technician, this line is of the utmost importance to hold on Ethereum. As long as it holds, you give it a slight positive bias. Now, why do I say slight versus huge positive bias? Because it concerns me how many times it's hitting this line, right? 1, 2, 3, 4, and 5. The more times it hits a line, the weaker that line becomes. The old adage of if you slam against a locked door enough times, eventually that door breaks down. So yes, it's still holding the line, so you give it the benefit of the doubt. But if it doesn't break up soon, I would be concerned that it's going to fall to the downside. If it does break, you're probably headed to at minimum 2650, maybe even 2400 in the near term. Okay, let's move on to gold real quick here as we go through. Gold continues to hover here. It is pulling back just a little bit. Just to go over the chart levels here, I'm just kind of zooming in so I can show you guys all the utmost keys. But basically what we have on gold here is a neutral bias, right? So we still have the topping tail intact, so that's still intact. This candle here, which is a bearish candle, but we did negate the bear flag high right here, which pushed it back to neutral. So negative plus positive move up, Those cancel each other out and gives us essentially a neutral rating on the gold chart. Now, if we break below this level here, right, this upsloping trend line, let's say price comes down below here, somewhere in this vicinity, now it goes back to negative, and you would expect a drop to 2,200. If it holds here and can close a daily close above basically $2,435, then it's all out bullish for the next run up north of 2,500. All right, so again, as a technician, my job is to look at the charts in an unbiased way, look at which way, what has to break for it to become negative, what has to break for it to become positive, and then I follow those levels. And that's what a true chart technician does. All right, on to silver we go. Silver, again, guys, not doing a whole lot here today. Let me just refresh my charts, bring them into focus. We are seeing a little bit of upside in silver. Silver still, as gold, it eclipsed the bear flag high here, so it's neutral, and it's not bullish because you still have the topping tail high. But this is the key. Notice how today's gold is down a little bit, but silver is up a little bit. The key here is understanding what silver is versus gold. Gold is a pure play safety hedge, meaning that when people are scared, they go into gold. When inflation is high, they go into gold. All these factors, right? Silver is an industrial metal. So when people think that there's a soft landing, when the stock market is risk on, more people are likely to buy silver than gold. And that's the environment we're in right now, is where people still are buying into this soft landing or no landing scenario, where we again are seeing a little bit of upside in silver versus downside in gold. If you start to see people questioning the economy and starting to see the stock market come down, then gold should outperform silver in those scenarios. Quick look at copper here, guys. Copper, again, is up today, but it is getting close to an absolute huge resistance level. So I have a level here, and I've actually started nibbling on some copper shorting here, but I have a big level. There's even an additional level here. You see this trend line right up here cutting through these highs. They're merging around 480 to 485 on copper. I would guess that's going to be a near-term high for a reversal back down, and I think it could be a pretty hefty reversal on copper to the downside. Speaking of copper, though, inflation, right? I mean, not good to see copper prices going up so substantially. Oil, real quick, guys, here. We have oil that, again, is hovering right on a major trend line right here. It has still not broken down. As of today, we are up slightly on the chart of oil. You can see we dipped last week, we dipped again on Friday, and they're bringing it back above. Now, the problem is this is starting to form a bear flag, right? So you're starting to get, if this price action maintains itself, eventually you would anticipate a break lower, which, by the way, would go with the idea that copper could be close to topping out. Both copper and oil are very much economic strength, strong plays, right? So when the economy weakens, copper weakens usually, as does oil, and vice versa. All right, so just something to keep an eye on there. Lastly, natural gas, which is basically slightly higher today. We still have our levels, and this is the beauty of it, right, is that I have my level of resistance, right? So here is my level at around 252, 2.52, give or take. This is a level where there should be significant resistance. I would consider shorting natural gas right here. On the other side, if natural gas doesn't get there and rolls over and comes down to this level around 205 to 210, then I would be a buyer. And that's the beauty of being, essentially a technical trader, is I couldn't care less what natural gas wants to do, or any chart. If it wants to go straight up, go straight up. I'll look for a shortable level. If it wants to come back down, I'll look for a buy level. There's no bias, and that's such a freeing thing for us as traders and investors to really just be like, I'm just going to react to what the chart says versus what I hope happens or what my gut. I mean, my guts don't matter, right? I mean, it just doesn't. It knows nothing, frankly. Same thing with my head. Like, I could think something and then the chart says something else, and the chart is usually the right one, right? At least in the near term. Okay, so that really summarizes where we are at this point. I do just want to say, as always, guys, don't forget, share this stream to be entered to win that TradingView 1-year premium subscription. Share that stream on socials or with your family or friends. Post below where you did, and you will be able to be entered into the drawing for tomorrow. And always remember, guys, you got to follow Verified Investing on YouTube or on Twitter, because we check that before you win. And if you aren't, then you don't win. It's just that simple. All right, guys. On that note, I wish you the best. I got to go get trading. Come check us out at verifiedinvesting.com. And as always, thank you, guys. Let's continue to rock.